Okay, so there's the trade in its entirety right there. So 5-minute chart, 1-minute chart. We tweeted out at 2:15, which was on this blue candle here. That was 2:15 at that point. That we were obviously going on bid watch. We saw the price sweeping, got bought out into the bottom edge liquidity. We got the POC of that sweep, effectively the Heisman trade, if you like. And then we bought basically above the POC, didn't we? Every single buy trade there is directly above the POC. Do you agree? There's the POC, the white line. So every single one of my buy trades is above the POC. So I'm not guessing what they're doing with the sell side liquidity. I'm observing what they did with the sell side liquidity. They bought it. So I've now got that information. I now want to take the market bid. I start bidding here because at that stage I'm now convinced, because the first two trades were what? What were my first two trades? Heisman, right? So these are Heisman trades here. So we've got the Heisman times 2 trades there, didn't we? The first two trades I took were Heisman times 2 trades just there. The price then failed and it came down and we got 2 leans here, right? So we got 2 leans at that stage. So when we get the leans at that stage, we don't know it's going to lean until it comes off the lean, right? We buy it on the way off the lean, not on the way into the lean. And that puts us into the right trade at the right price on the right bid watch. And for just 4 contracts, $1,600. How does that sound? Well, it doesn't sound like anything to Dennis, but because he can't hear us. But how does it sound to everybody else? Pretty good trade, right? There's a lot of quality in this. We get a lot of quality this sell side. The sell side liquidity that we want to use to get the deal done. And we've got the value. We're on bid watch only. We're getting the right trade at the right price. And we find our way to a $1,600 easy money profit. Now, we know this is the reason why I took the screenshot here is because of what reason? Come back to Austin's point. There's an obstacle there, isn't there? So if I know there's an obstacle here because buyers bought here the last time and they got trapped, right? So I can already recognize that there's an obstacle at this price point. There's also another obstacle. 23.50 wholesale. So there's a couple of obstacles in my way to get that price moving beyond that point. So what am I going to do? I'm going to tighten right up, and if the market sells off that price, I'm going to close off my sell trade, and then I'll look to buy back in again if the value is still valid, because I'm not a seller. I can't be a seller. I don't have any clue at all that I want to sell this at any stage. Well, we can look at how gold is developing here, and you can see it was a good decision, right? So we bought into this drop here. This was a buy trade here, if you remember, right there. So there's my buy trade. And you can see we got a max sell trigger coming in just there. Very close to the sell read that we've got just here. But the value still looks really quite punchy for a buy trade. So, I mean, the sell might be there, but that's just a sell to close out your positions, isn't it? It's not a sell. It's not going to be a sell to take a short sell. That was on the blue candle right there. Top tick the price actually on that one. So that's a crazy good trade in 4 contracts, isn't it? Now, obviously, we took some profits out here, so it wasn't the full 4 contracts. We took some profits into that trade there as well. But I don't want to go short. I don't want to exit my positions. I still think we've got a fair amount of room to go to make this high probability stick. And we did have a fair amount of room to make this high probability stick. You know, the idea is that if we hit this price, the probability is built to a buy trade. And this is just this concept of cyclical structure. So when we get that cyclical buy trade there and the cyclical sell trade there, that's just the market maker aggregating. And that's exactly what they did. They aggregated the low price here, but that aggregation was in line with the commercial value. So with an aggregation in line with the commercial value, I'm very, very, very excited to buy into gold, right? Very excited. And then we swept the liquidity, which you can see in the background. If I said to you, what is that line? You would all be screaming at me. It's a liquidity. It's a sweep liquidity, right? It's not a pool of liquidity. It's a sweep. And then when we swept these pins, that was exactly the same. And that was where my buy trade came from. Brilliant trade, brilliant trade, brilliant trade, brilliant trade. And then we've got the order flow to tie it all together. Brilliant trade. We took the screenshot, we made the monies, and then we gave you this trade in advance by 1, 2, 3 minutes. We gave you this trade 3 minutes in advance, and it allowed you to take advantage of it so you could make some money this afternoon off of that little gold trade. Staggeringly beautiful, isn't it? Staggeringly beautiful. But it's just about that, you know, making the beautiful decisions, making the right decisions. They're not always as clean as that. They're not always as good as that. But guess what? That's your choice. If you're bored, as I often get, I'll end up taking poorly formed trades at times. You know, there's a slight edge and I'll grab it and I'll get out of it probably for +1s. But when it's as good as that, I don't want to miss these trades. Right? These are benchmarkable trade opportunities.